Bring him on, or is someone else before him? I don't even know.
No, let's bring him onto the stream.
Since no one told me anything, I have no idea what the hell's going on. So, what's up, disciplined investor? How are you?
What's going on, guys? How are you?
Look at your new room. You got the red and blue light. You got there and the soundboard stuff. Is that from home or is that in the office?
That's in the office. We built the studio in the new office. So moved out to a new office a couple of years ago. Was kind of running a smaller studio for the podcast for years. I said, you know what? We're going to build a studio finally. And there you go.
Yeah. And it looks so. Can we get a wider view, or is it the camera not going to move? Can we see more of the studio or no?
That's about it.
So you got it.
All right, Jason, that's aspiration for us. We need to move towards that.
Yeah. We think we'd have some of this stuff, but we don't. It's awesome. He has a good setup there. He's underselling his thing. When I was there in his office like 7 years ago, he had a sweet setup. So he's underselling it. There's like all this machinery there and all that stuff. There is, Andrew.
We got to go. It's just warm in the room. By the way, how's the weather up there in Detroit, buddy?
So freaking hot. It's like, I don't know what the heck. It's like a warm, like, I don't know. It's like I just got back from Florida and I'm like wearing shorts in Michigan. No, it's like 10 degrees. It's like freezing.
Yeah, a balmy 10 degrees.
Yeah, it's freezing. Well, I don't know why people live here.
Yeah, humid. So, I mean, it's 60 degrees down here. I woke up to 49 and I was like, I don't even know I can get out of bed. So
I hear
you guys doing a great job. I just listened to the discussion with Peter Schiff. He had some good points there.
Yeah. I agree. I'm not in the metals, but I sort of want to be after having that discussion.
I mean, we've been for our clients, we've been running the metal side or commodity side for a long time, but this last go round, of the whole, kind of the last 4 years when all of a sudden the Republicans became Democrats in spending, that whole concept of where there was restraint for that party for a long time, and rightfully so for a lot of reasons, lower taxes, let's let this thing just inflate up. Powell and the rest of the Fed saying, hey, we have no inflation. And if there is inflation, they'll change the rules to make it look like there's no inflation, right? Just kind of work the statistics. I mean, it makes all the sense in the world to have inflation protection. And that's why you're seeing that with stocks and gold and to a degree silver and even like tips in the portfolio. So it makes a lot of sense.
Absolutely. And what else are you looking at? I mean, you've got the tagline, disciplined investor. It's I don't know if it's tough to stay disciplined at a time right now. There's probably never a more important time to be disciplined than right now. But I'm curious what you're telling people, what sorts of questions you're getting, et cetera.
So it's interesting because a lot of people, since, of course, the great meltdown of the pandemic lock-in of earlier this year, people got, pretty scared of, what's going to happen. Nobody knew what was going to happen the next day, not only with their portfolios, but with their lives. A lot of people wondering what to do. A lot of people just kind of washed out and said, I'm done with this. I've been through this before. I'm not interested. And then the question was, well, what now? And all of a sudden markets started turning around and we had the Fed backing it and fiscal stimulus backing it. And everybody was like, okay, let's get the markets back to normal as fast as possible. Let's get that wealth effect going. And then let's get hopefully the opportunity for, the economy back. And markets obviously took off. Now, one of the things that happened is it left a lot of people behind. That was a big problem. So very, very basic, non-trading side for a second here. We start talking to people, what is this all about? And what are you trying to accomplish? Are you trying to accomplish just being in the investment environment today and tomorrow and the next week? Or is it like a 20-year plan or a 10-year plan? So we kind of started working on this much more, as I call it, the 1 foot in, 1 foot out process of getting back in. So seeding portfolios through a dollar cost averaging process and then doing a good amount of opportunistic buying when and if there are dips at certain areas that seem like values there. And that helped a lot of people along getting back to where they wanted to be, but yet not in such a place that they were worried about this thing just busting apart and dropping by 20, 30% overnight. So it's been kind of almost a time of education and re-education for a lot of people about what their goals are, what their risk tolerance is, and really what they're trying to accomplish with their money. So that kind of differential between trading, finding a stock that could ramp and go wild to, investing. The other side of the coin is, what's out there and what is available. And clearly we're seeing, great opportunities alongside of this pump and dump scheme that has been kind of, it's been, I would say, romanticized in a way over the last several weeks in particular, but also with many of the tech stocks, many which have good fundamentals, but a lot of them that don't. So it's been a kind of an interesting battle right now.
Yeah, absolutely. And you know, we're pretty much back up to all-time highs in the S&P 500. I mean, I checked this morning, we were less than 1% away from all-time highs. You know, for a lot of your clients, are you keeping them fully invested? You know, are you diversifying them out of U.S. equities? I'm curious how you're handling that.
So we have in our one strategy, which is our global allocations, and allocation to equities, which are small, mid, and large cap, U.S. based, and also foreign between emerging markets as well as developed markets. Also have a position in real estate. Alternative assets are important. Commodities in there as well, and inflation protection areas like tips, and in the bond area, very short maturities, very short duration. So there is a mix in there, but we are also in our non-US bond exposure, whether it's EM or whether it is in developed. Most of the time, we're looking for unhedged to stay away from the weakness in the dollar that we continue to see, like you just talked about with Peter Schiff about the devaluation. Now, he's been talking about devaluation of the dollar since I had him on my show 10, 12 years ago. So this is
probably before that too.
Right. That's a constant theme, you know, the commodities and all that. I agree that there is that opportunity for the dollar to be devalued, but at the same time, you have to look at this in a relative basis, right? The fact is that the dollar is going down, but everything's going down also. It's a race to the bottom of currencies. We're not the only country. Yes, we're down 7% since the high in March or so last year in total. But I don't think necessarily the dollar is doomed like some people are talking about. But yet I'd rather be erring on the side of caution due to the fact that we have a pretty bad situation with the pandemic. Our economy is a big hole. We have the largest void to fill. And again, with the stimulus and the direct payments and the infrastructure bill and the spending and all that's going to go on, it doesn't necessarily look like it's going to benefit the dollar compared to other countries, what they have to put into their systems. I mean, look at Asia. Asia looks pretty good. Look at Vietnam. You look at certain areas throughout South Korea, et cetera. They're looking pretty good. China, and if we believe their numbers.
Are you doing any crypto investing?
You know, the problem with crypto investing with what we do is, first of all, what are we going to do with it? What vehicle are we going to use? So there was like the grayscale for a while there, right? And could we use that? Well, not really, because the premium is so wacko compared to the NAV. That came in a little bit recently. So that was a problem. The second thing is I have a problem if I can't explain valuations to a client. And if they ask me about it, even though the investment may do very well, how do I explain that to them? What is backing it and what's involved? So it's really been something we have not been doing at all because of vehicle issues.
Yeah, I recently bought some USDC and GUSD, which is like it's tied to the US dollar stablecoin. Supposedly your principal is safe and you have a lot more interest. I don't know. I don't suggest people.
What interest rate are you getting?
8.7%. And and supposedly my principal is safe unless like Coinbase goes out of business or unless Gemini goes out of business, which they could. I don't know. But that's supposedly, I'm not telling that's a fact, Andrew. I did this in the beginning of December. And so talk to me at the end of January or end of February, and let's see if my principal stays the same and the interest is there.
I'm assuming what you're doing is you're probably funding their operations with that is what's going on. I would assume.
But well, I guess it's like lending out the money so they can buy Bitcoin or something.
Right. Exactly.
Really sure. Yeah. So
you're on the other side. You're on the other side of the margining.
Yes. And I'm not taking principal risk with buying Bitcoin, which I own a little bit of Bitcoin, but I'm saying I'm trying to find yield on cash, and that's not the bank account, Right. That's JP Morgan's 0.005.
Right.
So
yeah, that's a bit confiscatory with the taxes that you have to pay, and then inflation. So it's pretty ridiculous. Yeah, I agree.
Right. Exactly. Yep. That's why. Yeah. How is Disciplined Investor? How you guys been over there?
Things have been great. I mean, the podcast is rocking, and new clients coming in. It's been a great year. My kind of business, we have a couple of strategies. One is our global allocation, which is kind of like the tried and true diversified portfolio. Then I have our trading strategy, which is a long short and hedge fund style. Like, gosh, I don't want to say the word hedge fund. Oh my gosh,
You're about to get flamed.
Oh my gosh! So it is a hedged style, not hedge fund style, a hedged style situation, and that's doing pretty well. I mean, we've attracted a lot of assets. It is used as a diversifier. We use individual stocks based on criteria that we've worked on for years to come up with. It's a screening process looking for growth of earnings, looking for solid growth of margins. We want to see ROE, above certain thresholds. We want to make sure volume is at certain trading. What's interesting is that this year we came to the year pretty light because we couldn't find stocks that met all of our fundamental metrics. Well, that was really good, right? So we kind of added some. We have about a 48% exposure right now to individual equities. We stayed away from some of the short side because while we did okay on some of them, the fact is when we have a stock like a Target, we're looking at Planet Fitness, which is trading about $74 a share, almost an all-time high. PLNT is a symbol where they have horrible fundamentals. They're in the chokehold of a pandemic, right? And the stock doesn't go down. You got to wonder, how much more am I willing to invest in something like that just can't go down?
Up in Planet Fitness, those gyms make a lot of money. People don't cancel memberships.
They don't, but they're also not at all at the membership levels they were. And in fact, the membership uptake that they always have in January, the fat December into the gym December, in January, where everybody goes to the gym. Well, their numbers are really way off, and you have to look at that. And I was on a couple of conference calls because a lot of those are owned by individual players, and it's kind of almost like a franchising process and system. There's not a lot of money to be made at the individual business level for whatever reason. There's a lot of equipment in there, a lot of overhead, a lot of waste. So we looked at this. We had a couple of trades on it. On the short side, we did okay. Then it started going up. I said, we're out of it. We shorted again. We did just okay, kind of came out almost at even. I said, you know what? Until we see a major change in the dynamic, whereas people are willing to buy anything at any price, right? Isn't that what's going on right now? You got to kind of play the long game pretty hard.
Yep. Every time I've, trimmed my margin, I have a little margin. It's been the wrong move. It's been the wrong move every single time.
Right.
I mean, I was 20% margin. Now I'm down to like 8, and I'm mad I did because it's been the wrong move every single time. And I say it to myself when I do it, but it's like be conservative, Jace. Don't mess it up.
Yeah, you don't want to be 130% long when we see a 7% correction or something like that.
Yeah, especially with individual stocks, you get slammed by 20%.
That's what I was going to say, especially since you own the high flyers, right? So,
yes,
if GM moves down 3%, Tesla's going down 12%.
Especially since all my money's in AMC. Just kidding.
That whole thing this week has been really an interesting discussion. I mean, I know you've been talking about it a lot, this whole, and I'm probably going to get a lot of people pissed off right now, but I talk about it on the shows, DH Unplugged, the Disciplined Investor podcast. I talk about this all the time, and I've been interviewed about that. This whole idea that this is a revolution, it's the idea that there is this social justice and equitable change in how the assets are distributed. I mean, this whole thing, in my opinion, with many of these names is simply a greed play, which is fine. You want to trade it, that's great. But to go into this with flags waving that we are taking over and that we're going to get rid of all the things that were done to us negatively over the last 20 years by Wall Street, for those that just opened up Robinhood accounts 3 months ago, okay, and never invested a day of their lives, is kind of a little ridiculous.
I hear you. I hear what you're saying. I mean, I don't know if you know this, but last Thursday is like we were the room where it happened. The stock didn't move. It was at $41, and Citron came on our show this Thursday before last. Citron came on our show, this exact show that you're on, and we had no idea he was coming on. It was about GameStop because his Twitter account got hacked. Andrew left, and then all of a sudden the Wall Street bettors came on the show, and it was.
Well, it didn't get hacked. Just to clarify, it was the internet issues, but keep going.
Okay, the Wall Street bettors came in the show, and they took over the show, and it was mayhem. And then we had a Wall Street bettor guy speak, and it was the start of the craziness. We didn't start the craziness. We were the room where they had the fight, and it was yeah. And I just and Andrew left now is no longer going to be publishing his short research, which I always thought was a dumb thing to do anyway.
Why? I like that.
No, I like it. I like it as a consumer of the information, but that can get turned on you. Listen, just look at Bill Ackman when he had that big mouth all about HLF, right? And what happened? God. He got slammed for that. Look at a lot of the things that happened with the Einhorn, a lot of his shorts. When he went public with a lot of that, it really turned out very badly because people got aggravated because they think shorts are a bad thing.
Yeah, and all of you out there, you need to do yourself a favor. Type in Ackman versus Icon on TV. If you have not seen this video, it's like other than what we do at Benzinga, it's probably the best 20 minutes of financial programming of all time. But basically, you've got two billionaire hedge fund managers just duking it out on TV, right? They get personal. They talk about the stocks a little bit, but I mean, they're just going head to head. If you have not seen that, do yourself a favor and watch it. It's well worth it.
And by the way, you have old school, new school. You know, you have Ackman, who in that incredible amount of facts, right? All sorts of information, all sorts of research. I think when he went kind of jumped the shark a little bit was when he had a website like, you know, herbalifefraud.com or whatever he had, that website. That was kind of like, all right, enough, you know? But then he got Icon involved, and Icon was it was all about just fat money going to sit on the opposite side, right? And just try to bust this trade. And he did it pretty well.
Yep.
But I think everybody believed Ackman, to be honest with you.
I did too.
But the trade swung to Icon because he was just, you know, they just crushed him.
Yeah. Yep. I know. I mean, I watched his movie. I mean, all of it. Right. And I was behind him and I'm like, yeah, this company's going down, but sure enough, he got hit on it, had to cover, had to change how he's doing his short position to puts. I mean, yeah, it was a fiasco.
Right. Yeah. Yeah. So, I mean, this whole thing with GameStop, I mean, and then you have like a Mark Cuban on CNBC today. Did you see that interview?
He was mad. He was mad because they misquoted him, and he was in the Wall Street Bets Reddit community last night and answering all these questions. And he said, just hang in there with your stock in GME, but there was more to the thing. So Deidre Bolton didn't give the whole quote, so he called immediately because he was getting ripped online and to defend it. But yes, what's your take on it? Because I know he talked about valuation doesn't matter sometimes. Let's hear you.
Yeah, he's trying to make a case for valuation for GameStop with some ridiculous numbers. Number one. Number two, what is he doing on the Reddit anyway? He's playing games. Let's be honest. Okay. He's telling people to invest in GameStop or hold your position or whatever he said. What is he doing there? Where's his expertise in that area? I mean, he's got a big name. He's Shark Tank. He's Mark Cuban. I get all that. Smart guy. I understand, billionaire, done well. But what is he counseling people on a Reddit board? I just don't understand why people are getting involved, except for their own egos in this whole thing and trying to stoke
pandering a little bit.
Yeah, stoke a fire, get in the limelight. Listen, all of our media has seen a major bump in the last 2 weeks. Would we agree with that, with this whole fiasco that's going on, this whole experience? I mean, my numbers on my podcast went straight up. So... And we talked about it last week. This week coming up, by the way, Anthony Pompliano, you know him?
Yeah.
Anthony Pomp, he's coming up this week. We're going to interview later this week.
He's great.
We're going to be talking about crypto. We'll be talking about all of these trading. But listen, when we look at
a weird one for you because you don't do crypto.
That's okay. He covers a lot of different areas, but we're getting there's a lot of talk about crypto. We might as well educate on it, right?
Yeah, you're gonna have to buy it by the end of the show, man.
I have a little Bitcoin. I do have.
You need more. You sound like you're like not a believer in the crypto trend. It's all right. Anthony will convert you. It's okay.
I'm sure he will. I'm sure he will.
He will.
But but the thing is, about this GameStop, whether or not GameStop is worth whatever number you want to put on it, the tell of this whole thing was when we saw all these other names. I saw you mention earlier COS. You got AMC. You got Build-A-Bear. Build-A-Bear. I mean, come on.
I was in it.
Okay, you could be in it, but you're trading it, right? You're not
trading it.
I did Tootsie Roll the same way.
14% on Build-A-Bear, and then I got off.
I got it. Listen, I just was going to put on GameStop. I just closed it out. I made 100% on it. Yep. So, it's great to trade these things, right?
Jason and I are in that one too.
Yeah, I mean, so the thing is, you trade. There's a difference between trading and investing and a religion. Once you start getting into the religious aspects of this whole thing, once you get into this is going to be, once you make a hold a flag up, or once you decry something that this is not this financial justice mission that you're on. I see it all over the place. We're going to break them. Who's going to break what? And why would you want to burn your own house down anyway? Have you ever wondered all those riots? People burn their own houses down. You're like, what? Why are you burning your own house down? Burn down something else. So the whole thing.
One thing I do want to talk about, we haven't talked about this before, Jason, but I'm just going to bring it up, which is on the valuation side of things for GameStop. When the stock, and I know, right, like actually making the fundamental case for it. When the stock was at $400 a share, I think it was, I don't know, It was 30 billion market cap, something like that, 20 billion. But at $400 a share, it's only trading at like 4.2 times sales. S&P 500 average is 2.79 times sales.
Yeah, but look
right?
at
it has negative net income, right? So obviously that's a problem, right? It's not like you can say it's any times EBITDA, is it has negative EBITDA. But I mean, given all this publicity, right, and all these people, fanning around it, if they get a sales boost and flip some positive EBITDA, I mean, it's not insane.
But what about this? Has anybody? Maybe I'm wrong about this, and maybe you guys can help me. Mm-hmm. How come they haven't done a secondary? Did I miss the secondary?
I can't give you an answer on it.
They're going to get in trouble if they do. I think that's why.
The only answer I can give you is the banks that they're going to are saying this is up because of Wall Street bets. It's going to fall. So we're going to buy the $100 million in the secondary right now, and then the stock's going to fall to 14, and we're going to be left at an $85. So they don't want to be the dumb bank. That's the answer I got from a couple of people.
I don't know. Somebody did the dumb bank thing with AMC then.
I know. They did it at 4.5. I know.
Insiders were selling BlackBerry all over the place. BlackBerry, that's another one. I mean,
Yep.
Some of this stuff is a little weird is all I'm saying.
Yeah, I mean, we saw, which one was it that went bankrupt and tried to do it? Hertz or something?
Hertz is bankrupt.
That little pop, and then they tried to do the secondary.
But by the way, Hertz wouldn't be bankrupt. If this would have happened now, Hertz wouldn't be bankrupt. That stock would have been way up, just like Sears and all that stuff. So it's timing. I mean, this is a whole thing. So,
but remember something: the share price itself does not necessarily correlate to whether the company is profitable or not and can continue as a going concern. So whether we have a stock that's GameStop at $5,000 a share does not mean the company is going to do well in the future, nor does it mean that the company right now has the wherewithal to stand with I think it's $1 billion of outstanding debt and all of the things that are going on in the industry changes. I mean, GameStop is Blockbuster, is it not, compared to other things out there? They've tried to make the pivot. They learned from a Blockbuster where they shouldn't stay with what they're doing because what it is the only thing they know. They pivoted. There's a lot more things they do, but it's still at the end of the day a retail establishment dealing with games. And we knew this when all of a sudden Apple and Google started doing games on the phones, right? GameStop was like, that's a problem. So you look at that. You look at AMC. Is AMC a going concern? It was a problem, and it is a problem during the pandemic where you can't go. But there's alternatives now. People are much more used to watching premieres, The Mandalorian, a series from Disney, on their TV by buying a subscription versus going to the movie theater. I miss the movie theater. I'm sure you do too, right? Going to the movies, the big screen, paying for the popcorn, paying $42 for your family for popcorn and drinks. But yet, and Jason, you have a big family. You know what it's like. They like the candy, like the M&Ms. Dad, I want the big popcorn. I want the kiddie pack. I want the $5 small Diet Coke.
Now we just watch it at home. On Netflix.
You just watch it at home. Or you'll buy it.
I paid $20 once to watch a movie premiere, like on opening night.
So isn't that interesting? So for the longest time, my wife and I, we looked at, you got to pay $6. Oh no, I'm not doing that, right? For a movie, or $9.95. Now it's like, it's $18. I used to pay $25 to go to the movies for the two of us. Well, we'll just buy it at home. I got a big enough TV in my house. And if worse comes to worse, I'll move a little closer to it. It'll be really big, the TV, right? So
yep.
We've all changed.
Kevin O'Leary thinks the movie theaters are going away.
I would tend to agree with that. I think they're all going to become Amazon fulfillment centers. Just saying.
Okay.
Right?
Yeah.
So
maybe.
Or sports betting. Maybe they get some interactive sports betting thing going. Who knows?
Yeah. There was actually an announcement yesterday on, I think it was Carnival announced that they're going to have a sports book. And I was pretty excited. I'm like, wow, that's cool. You go on a cruise, there's a big sports book like they have in Vegas, a room where you hang out, you smoke some cigars, you have a few drinks, you hang out with the gang, you're watching the games and all. Then they announced it's an app-based when you're at sea only. So I'm not sure what the excitement was about for that. But, a couple other things. You want me to give you a couple of the symbols and things that I'm thinking about?
Yeah, hit us. We do have to hop to our next guest in just a couple minutes here, but hit us. We'll never turn down symbols.
Yeah, EV Space, you probably know Blink, the charging support for Blink on that area. NIU, which is a Chinese e-scooter company. Tattooed Chef, I call it manipulated proteins. It's kind of the same genre of Beyond Meat, TTCF. Celsius Holdings. Celsius Beverages, if you will, CELH, kind of an alt beverage that if you look at that chart, CELH, it looks fantastic. and we own that for clients. Many of these we own for clients, but that is really taken over pretty well, and a really exciting name, I think, for what it is. I mean, for what it is, it's not a Tesla, but stock chart looks pretty darn good.
Yeah, I'm just looking at it now. Again, that's CELH Charlie Echo Lima Hotel. It's a nice chart.
That's all I got.
Cool.
All right, skip to another guest. Thanks for having me, Jason. Next time you come down, come on, we got to go fishing. We got to go boating. We take the fam out.
What city are you in right now?
I'm in Fort Lauderdale, always and always will be.
Oh, but
Well, you're a Palm Beach guy. I know you. You're a Palm Beach guy, dude.
I'm at Mar-a-Lago, whatever it is.
Of course, at the Ritz. I know. It's
beautiful. It's beautiful in all Florida. I don't know. Yeah. Or I'm going to move to Puerto Rico with Peter Schiff. So one of the two.
Is that where he's living?
Yeah.
Really interesting.
We'll talk about it later. Yep.
All right, see ya. All right, thanks
for coming on. Nice seeing you.
Thanks so much.
Long time no talk.
Yeah, absolutely.
Yeah, and my brother-in-law just wrote, I'm an Aventura guy.
Oh.
That's where his mom lives there, and I used to.
We call that South Boca.
Yeah, there you go. All right, I'll talk to you.
All right, guys. Thanks so much. Thanks, Luke.
Thank you.
Bye.